Namaskar and welcome to Sansad Television. I am Vishal Dahiya and you're watching our show Perspective, where we bring you detailed analysis of key national and international issues. Today we're going to talk about cryptocurrency and specifically RBI's warning on cryptocurrency. Now, RBI Governor Shaktikanta has said that cryptocurrencies are a clear danger and anything that derives value based on make-believe without any underlying is just speculation under a sophisticated name. RBI's 25th Financial Stability Report, or FSR, released earlier this week says the growing threat of the crypto assets ecosystem warrants drastic approaches by national authorities. The central bank also said that several vulnerabilities associated with the crypto asset markets have been highlighted, such as linkages between crypto asset markets and the regulated financial system. In fact, RBI has on several other occasions flagged concerns about cryptocurrencies, which are seen as highly speculative assets. In recent weeks, cryptocurrencies have witnessed massive volatility amidst global uncertainties. Meanwhile, the government is working to finalize a consultation paper on cryptocurrencies with inputs from various stakeholders and institutions, including the World Bank and the IMF. So to further understand various aspects of the threats and challenges being posed by cryptocurrencies, we have with us a distinguished panel of experts. Let me first introduce them to you, beginning with, we have with us from the industry, Mr. Satwik Vishwanath, who's joining us. He's the co-founder and CEO of Unocoin. We also are joined by Professor Saund from Indian Council for Research on International Economic Relations, and Mr. R. Gopalan, former Secretary, Financial Service in the Ministry of Finance, Government of India, is also with us. Welcome, all of you, to Sansad Television. I'll begin with you, Mr. Gopalan, and let's start by trying to understand the basis and also the context of what RBI's FSR says vis-a-vis the cryptocurrencies and the threats or challenges being posed by cryptocurrencies. How real and how large and serious are these challenges?
The Financial Stability Report has pointed out many issues which can impinge on the financial stability. And one of them seems to be financialization, the use of technology and financialization of the economy. Under that, they are looking into both the central bank cryptocurrencies as well as the cryptos, which as we normally call in terms of like bitcoins and those kind of cryptocurrencies. They have pointed out that there are difficulties, there are challenges which we need to face. Especially they find that those cryptocurrencies which are not backed by assets, they say that they are just a fool's paradise. They think that they are going to really, take us down the drain. And even on other currencies, like the stable coins, type of currencies which are backed by some kind of an asset, they are looking at how they can create total difficulties in the market in terms of redemption pressures, then investor when they runs on the amount they have deposited, and they become illiquid. They're like money market funds, they feel. So they believe that the entire ecosystem of cryptocurrencies, there is an issue relating to money supply, interest rate, macro stability issues which it can bring in, especially in emerging market economies, which are have a risk of capital account convertibility regulation. They have a problem in that.
Okay.
And they also think that when a run takes place in those things, the economies who have a dollar parity kind of economies, they have a risk financial system through exchange rate changes, and they believe that we need to look into this little more carefully. And I think the message they are trying to convey is that either you have a good regulation and a regulation which can be implemented with all kinds of controls. They think that unless we have that system in place, they think that cryptocurrencies have a financial stability problem.
Okay.
And at the same time, we have the BIS publication on the second consultation paper on the cryptocurrencies they have issued just now in this month. And they look at those which are backed. They are looking at existing Basel framework, way of capital availability, and then those which are not backed by assets and which have, ineffective stabilization mechanisms are there. They think that capital exposure should be restricted to 1% of the bank's tier 1 capital. So these are some issues which people are trying to see how macroprudential risk can be overcome by many measures which can be brought in. But still, this is again a subject which is under discussion and not finalized. And RBI also has sounded warnings on CBDCs, how they can also, upset various other things. But they have not said that CBDCs are something which cannot be introduced. They have said that there are a lot of ifs and buts there. But on other cryptos, they have clearly stated that there are huge problems.
Okay. By CBDCs, you're referring to central bank digital currencies as well. So that's also a very interesting aspect there. And we'll talk about the consultation mechanism, the regulatory framework as well, which is being discussed a lot. But let me bring in Professor Ray here as well. Professor Ray, from your point of view, if we have to understand the RBI's concern, and this is not the first time the central bank has raised concerns vis-a-vis the crypto asset ecosystem, which includes, of course, cryptocurrencies. But on repeated occasions and for almost 3 to 4 years now. So if we have to understand those concerns vis-a-vis the economic framework and our own, economic framework, how real and how serious do you believe these concerns are and the way they can be tackled?
Yes, thank you. The concerns are very real, but to understand these concerns, I think we need to take a little bit of a step backwards to understand the genesis of cryptocurrencies and Bitcoin in general. Most of these actually have come up after in the aftermath of the global financial crisis, because there was some kind of distrust in the money created by the government. And it was thought that maybe cryptocurrencies would provide a better store of wealth. In recent times, what we've seen in the market that this has not been proven correct. In fact, cryptocurrencies are not proving to be a good store of wealth. So the risks that RBI is underlying, they are real. But we have also to understand that RBI's position from right from saying first that they are completely banned to saying that they present a clear danger. This is a bit of a change in position. So we have to take that also into the context. Coming to the other thing that instead of cryptocurrencies, which are private, could a government or a central bank backed CBDC be the answer? Again, there are issues, and India right now is in fact thinking about the design of a CBDC. Some countries are also thinking about that or tinkering with the designs for the CBDC, but in most cases, it is still early days yet.
Okay. Let me bring in the industry perspective also. Mr. Satvik Vishwanath has been patiently listening to both of you. Mr. Vishwanath, the first and the foremost and most important question, or the charge against crypto asset mechanism ecosystem, or rather cryptocurrency specifically, is that the volatility aspect. And we've seen in the recent weeks how wealth worth millions and billions have been wiped out because of the global issues. And this market-related mechanism, that's one. And two, as the RBI is saying, the lack of asset-based, backing. So how do you counter that as an industry representative? How do we look at responses or solutions to this particular question?
Sure. So the crypto assets industry we are talking about here is quite new in nature, right? So if we talk about gold, we may be talking about a history of 5,000 years. If we're talking about equities, then we're talking about maybe 100 years, etc. So now we are looking at a new industry altogether, and it is bringing some of the aspects that did not exist in any of the other asset classes. And the perspective of India obviously is different. We have things like capital controls, etc. And when we're talking about financial instability, it's not like Indian, right? So the concept exists across the globe, and there are different perspectives and different theories and papers submitted by well-established and developed governments to all the way up to the different big four, etc. as well, right? So I mean, it's not that everyone is doing their research; they're looking at it in their own perspective, and they're coming up with the answers. And so, as of now, we know that the prices are going low, but at the same time of the year last year, it has gone up by like much more higher as well. So expecting the volatility to decrease so soon when given the disruptions and the newness of the technology and what it is capable of doing, it could be too immature is how I would see this as. And when you talk about asset backing and such, right? So it's again, it comes down to the buyer and seller, and where the buyer is seeing the perspective of this thing would go ahead, and where the seller want to exit his portion thinking that it may not go ahead. So that's pretty much like how all the markets are made as well, and so is the cryptocurrency industry. And let's say if you take an example of Bitcoin, you cannot create Bitcoin out of thin air to say that it is not having any kind of backing, etc. So it needs a lot of processing power, electricity, the internet, and multiple computers working together to create this kind of asset. And it happens in a completely decentralized manner, which means there is not like one person issuing or one country issuing it. So these things are new, and I'm very sure that the central governments, the way they work is very different from how the cryptocurrency like this works. So it gets distributed automatically, it gets valuated automatically, it gets traded across various countries, etc. So I think it'll just be us who will have to catch up. It is not that the industry or the cryptocurrency will or the activities or transactions will reduce just because like what Indian perspective is. Here we're talking about something which is global in nature. And from my understanding, the particular role that India is having is like less than a few percent of the entire 100%, right? So it is for us to catch up and to make the peace with this and figure out how to take it forward. Okay. And also, last thing, if I can highlight here is that when these concerns come up, they obviously want. We want them to contact the industry players to say, oh, look, this is the concern. What is your perspective? We would obviously say, okay, this is the technical solution that we can provide. This is how it can be handled. Others will say that, yes, this is a real concern, right? So, it is not a dialogue that's happening. On one side, you're just coming up with saying there are concerns exist. But on the other side, there are industry players who have worked in it for about 10 years, who have the vast required knowledge, who have seen everything across the world. How this has worked, right? So there is a disconnect.
So wider consultations you're referring to, that is required. But that aspect, vis-a-vis the linkages between the crypto asset ecosystem and the regulated financial system, that point, I'd like to bring in Mr. Gopalan here. Mr. Gopalan, when we were talking about, the consultation process and the regulatory framework being talked about to be put in place, of course, that would be required. But the bigger challenge, which the central bank, RBI, has pointed out again in its FSR is, find a way to ensure a better, proper, coordinated linkage between the crypto asset ecosystem and the regulated financial system. How can that be achieved, and what are the various options here?
This is a very, very important question here. This has been a problem even in advanced countries like US and EU also. You have seen the Terra Luna, Celsius, and Three Arrows Capital issues which are rocking the world at this point in time. And fortunately, there are crypto specialists who lend money to these kind of activities. The bank's exposure to these crypto assets is limited. In fact, they are little less than 1% of the tier 1 capital at this point in time. If you look at the various banks in the advanced countries, that's the kind of capital exposure they have got. So in that sense, they think that they are not seeing a problem, and there is not much of a withdrawal taking place as a result of losses in the crypto assets, where people have taken derivatives or positions and things like that. They have to pay margin money, or they have got to recoup the losses, whichever way. They had to come back to the traditional financing system to finance that. And that kind of a withdrawal is not happening at this point in time. So how this is happening is, if we have the traditional financial system which are exposed to the cryptocurrencies, if you are able to ensure that there is a prudential limit beyond which they will not lend to cryptocurrencies to begin with, especially to those which are not backed by any assets. Now, because the crypto, like bitcoins, there are no issuers, there are no intrinsic value, as governor says, and it's not an instrument of debt. This is another point which we have to keep in mind. So keep the lending limits much tighter in respect of those bitcoins which are not, having an asset backing.
Okay.
And to those which have got some asset backing, have some relaxed way of, giving, loans for playing in those, markets. So then keep a clear eye on how these markets are behaving and see that there is a risk on the traditional banking system does not, overplay. So, then there are still problems. There is, that is called what is called a recursive borrowing, which has been done in the US markets, where the same asset has been shown many times over for borrowing, for playing in this market. So these kind of things have to be capped, or this kind of things should not be allowed to happen in this country. So a very tighter way of looking at it, having on the financial institutions is necessary at this point in time. But these are something on which, as Satvik says, yes, there should be a dialogue. There should, both the people should understand each other's concerns well. And based on the dialogue, apart from Satvik may have some problems on the taxation, present taxation structure also. So if all those things must be taken into account together, and good dialogue must take place, and see each other's position and evolve a situation where some amount of play can be permitted in the country, but very cautiously, with all the kind of constraints which one can put into the system.
Okay. Let me go back to Satvik here. Satvik, you're earlier referring to wider consultation, all that. So this important aspect, of linkages, because ultimately for an crypto asset ecosystem to become more successful, the linkage with the existing, financial system, the regulated one, will have to be seamless. And as Mr. Gopalan is saying, both sides will have to work towards it. So from the industry perspective, from the crypto industry's perspective, what is it that can be done to make this more smoother?
I think than industry perspective here, on one side, we see that, RBI wants the required linkage to happen. And on the other side, the banks and these financial institutions are not supporting us, sometimes through bank accounts, sometimes through UPI, etc. So we actually, the crypto industry is one of the industries where there used to be, there is always a banking related problem where we are required to change, bank accounts, and all of a sudden there is like the legal team of the bank, comes up saying that, okay, we don't know how this thing work and we want to change. And sometimes they keep hearing from Reserve Bank of India that they don't want to provide the bank account and such. So I think it is like very, very simple, right? So the moment we have seamless banking, with all the required services, we will be able to account for every transaction that is happening in this country through the exchanges, right? So and then, however, as of now, we are required to do the submissions to the income tax department. Anyway, we were happy to do the same for Reserve Bank of India as well. It will be as simple as that. So, we are happy to work on the technology side of things to give them the comfort zone, but obviously we want their support when it comes to compliance.
Okay. Professor Ray, this becomes very interesting as Satvik is referring to it, and this has been industry's, point of view for quite some time, that this is a developing technology asset, something which you can't overlook. But then from the regulator's point of view, there are underlying challenges as well, and those challenges are to, ensure that the regulated financial system, the existing one, does not come under shock and awe from, the new element which is entering the scenario. So again, this linkage part, from your point of view, how can it be more smoother? What needs to be done from both sides, from the regulators and from the industry as well? Professor Ray?
Is it for me? Yeah, so...
No, this is for Professor Ray.
Sorry.
Yes. Essentially, what needs to be done, and it is in fact done in the financial system, is establishing the KYCs from both sides. Now, the problem is that, or other kind of means of onboarding, which we see in other financial assets. Now, the problem that we see in the context of cryptocurrencies is that the regulation by the RBI is difficult because it is mostly done privately and RBI and anonymously, which is difficult for RBI to regulate. And this is, in fact, what could be is sought to be corrected in something like the CBDC. But if there is that onboarding and the KYC elements, even in crypto exchanges or transactions, it will take away the anonymity, of course, but then it can be made less risky. Of course, the industry has to tell us how this can be done at costs which are manageable. But as Satvik pointed out, I think the dialogue between industry and RBI and the finance ministry on this is essential to have a smooth functioning of the system.
Okay. Mr. Gopalan, Satvik again is pointing to this, and final question to you, because we're running short of time as well. But, the development of technology is something which we will have to keep pace with. But then ultimately, the regulators are also faced with this task of ensuring that everything runs smoothly. So in terms of looking at it from the regulators' perspective, from the central bank's perspective, from government's perspective as well, how far can, the regulator or the government can go in terms of accommodating what the crypto assets ecosystem requires for these linkages, and also ensuring that those challenges or those, threats are taken care of?
This is a very, very difficult, technology. The distributed ledger technology is very difficult. It is anonymous, as Professor mentioned. So KYC is a very, very difficult issue. And we have got a FATF, we are signed to FATF. There are, terror funding issues are there. So, and there are problems relating to monetary policy, to what extent the monetary policy is, influenced by the cryptocurrencies because of the velocity of money change that can take place while, operating these kind of currencies. Then there are cybersecurity concerns which are there. So, and all these things ultimately lead into financial stability. The RBI is responsible for financial stability, and financial stability is uppermost in this country because the crypto area is very, very small portion of the country's GDP, and therefore, what is more important is keeping the financial stability in mind. But the technologies, as they evolve, in my view, we cannot bypass them. They will in some way, come back to the customers will start using it, and instead of it going under the table, it's better that it is done in a manner that it is able to come above, it is, properly controlled, and it is able to give the benefit to everyone consistent with the financial stability. Okay. So there are 2-3 people who are involved in this. There is an exchange, there are brokers, there are buyers and sellers, there are funding people. Now, how all these people work within a system, and what kind of controls can be imposed on these people to ensure that the ultimate goal of financial stability does not suffer, is something which we need to evolve. Okay. And this can be evolved only, as all of you have mentioned, through a dialogue with RBI, with the government, with the issuers, with the customers, with the financial institutions and government. All those people have to sit and evolve a mechanism by which this can function. Okay. Until the test of financial stability is, fully guaranteed, I think this kind of discussions will keep on going. Indeed. So I think everybody will have to show some amount of, eagerness to come forward to discuss them in full transparent fashion, and evolve a mechanism if it can be evolved. Indeed. That has been the motive of this discussion as well, to try and bring in all views, make people understand both sides of it, and what exactly can be done in terms of suggestions being given by you. Thank you so much, Mr. R. Gopalan, Professor Ray, as well as Mr. Satvik Vishwanath, for sharing your views and insight. As our experts were pointing out, clearly there are a lot of challenges when we're talking about the crypto assets ecosystem, or cryptocurrencies, so as to say, and their linkages with the overall regulated financial system. A lot of aspects which need to be taken care of. The KYC mechanism, the threat of cybersecurity, and most of all, the financial stability aspect. But as our experts also said, that the developments in technology can't be wished away. They will have to be discussed, and solutions have to be found, something which the government and the regulatory bodies are working on in terms of the consultation mechanism. We'll come back again with all details on this and various other aspects and issues. Till then, keep watching Sansad Television. Thank you.